today's video, I'll be sharing with you the trade I took on Tuesday last week. I took this trade on Nasdaq and S&P 500, and I will still show you how I did top-down analysis before I took the trade. The three pairs that I trade Nasdaq, S&P 500, and US 30. I choose these three because they give me confirmation. They give me extra confirmations before I take any trade. That confirmation is SMT divergence. When doing my analysis, if I don't see this, I don't take a trade. Once I see it on my chart, that is when I am interested to execute, to go long or go short. If you don't know about SMT divergence, you can see the plenty of video. You can see the videos on YouTube. Go and watch. But I promise I will make a detailed video about SMT divergence. Let's go ahead with the analysis. I started on daily time frame. When last week Friday closed, I marked the low of Friday. Look at it here. This is Friday. Why did I mark the low? Because I saw fair value gap here. We all can agree that this Nasdaq, S&P 500, and US 30 has been in an uptrend for a very long time. So I was still looking for continuation to the upside. So this was on Friday. So on Monday, remember, after Friday's closure, we had a fair value gap here. But let me go to S&P 500. There was still fair value gap. Look at it here. But US 30, there was no fair value gap. It was a balanced price action. Look at Friday's low. So I was hoping that on Monday or Tuesday, that this Friday's low on US 30 would hold, because market don't have any reason again to take out this Friday's low, because there was no fair value gap here. It was already a balanced price action, unlike Nasdaq and S&P 500. So if you look closely, you notice that on Monday nothing happened. So I was not interested. But on Tuesday, look at what happened. Tuesday took out Friday's low and came down into the fair value gap. So in other words, this is liquidity grab. Tuesday grabbing Friday's low, but US 30 failed to do so. Look at it, because you know they move together. They are positively correlated. These three pairs, they are positively correlated. When one makes a lower low, the other one makes a lower low too. But a situation whereby one makes a lower low, the other one makes higher low, then that is disagreement between the two of them or the three of them. Some traders use S&P 500 and NAS 100, but me, I combine the three, because in some cases that particular S&P divergence you are looking for will not be present in S&P 500 and Nasdaq, but it will be present in US 30. That is the reason why I use the three. So this was my first confirmation that the market wants to go long. Look at it. The US 30 made a higher low, while Nasdaq made a lower low. Look at Nasdaq here, made a lower low. You understand? So what I was waiting for, after the liquidity gap on Tuesday. Look at what happened. Market came back. On 1 hour time frame, because I was on daily time frame before, but on 1 hour time frame, look at what market did. Look at the aggressive move to the downside. The importance of SMT divergence is that, as in when you are looking at these three pairs, the benefit is that when you see an aggressive move like this, some traders will be selling. But if you are watching the other pair, I call the other pair the brother. And Nasdaq is brother to S&P. US30 is brother to Nasdaq and S&P. When I look at the brother, I didn't see this aggressive move. This low was not taken up. So what I did was I waited for, as I saw aggressive move down, grab liquidity below 5 days low, then close above on 1 hour. As I saw this close above, I waited a bit. Then I saw this retracement. I took the trade here. This was where I took the trade here. Then put my stop loss below the liquidity area. I was targeting here, but Nasdaq was a bit slow that day. Where I made 1 to 3 was S&P 500. I didn't take US30 that day because I couldn't open 3 positions at the same time. So I took S&P and took Nasdaq. But US30 would have made me more profit. But I used US30 to confirm that the market wants to go long. S&P 500, let me show you where I took the trade. Look at it. S&P 500 just grabbed 5 days low. It just grabbed close above. So I took S&P 500. Immediately I see this close above. It was here that I took the trade. Somewhere here. I took the trade somewhere here. I will show you the result of this trade that I took. I have it before and after. I made about 1 to 3 or so on the trade. But look at the confirmation on US30. Let me show you. US30 gave that confirmation you are looking for. Look at US30 here. US30 did not grab 5 days low. You understand? Then when on 1 hour's time frame, look at it there. This is SMT divergence. This is how it looks like. So I was looking at, on 1 hour's time frame, I was looking at this particular high to get to for me to have a break of structure. You understand? Even if you go to 15 minutes time frame, it looks clearer. Let's see on 15 minutes time frame. Look at it on 15 minutes time frame. So when I saw this, I knew that the SMT divergence will hold. So if actually I wanted to take the trade on US30, as I saw this market structure shift or break of structure, anyone you want to call it, look at the other block. If you know what other block is, look at the other block. So I would have taken this trade from here, tip of the other block, then maybe put my stop loss here, but that would be risky for me. I don't like doing that. I put my stop loss on the low. Look at it here. Then I would have targeted this area. Look at US30 was crazy. Look at it, more than 127. Yes, but I didn't take US30. I only took Nasdaq and S&P 500. But I got the confirmation I wanted from US30. That was where I got my confirmation. So guys, I will still show you the result of the trades. I will show you. Okay guys, if you find this video helpful, please like, subscribe and share so that the video will go viral, so that the video will reach greater audience. And don't forget to turn on the bell notification so that whenever I drop a video like this, you'll be the first to be notified.